All right, guys, and welcome back to another wrap up for the 4th of December 2020. Going to make this a quick one. I had some technical difficulties that I'm getting through now, but hopefully we can get this out for you. So, ever since we broke this top and came back to retest it and bounced off, I'd been saying when we were pulling back here not to worry unless we violated this area. Seems like that was bang on, because ever since then we haven't really looked back. Closing at a high on Friday. No technical reason to be bearish of this market at this time. Everything's looking great. So, it can crashes come out of the blue and things like that. Of course they can, but there's really nothing here that I see that really worries me. So, again, just watching the short-term moving average, as long as we stay above this, I am both short-term, long-term bullish. If we kind of crash and close below it, then I'll be a little bit more worried. But again, this orange line right here is where I think kind of the line in the sand is we need to watch. Another good week this week. Again, if you guys are new here, this is where we take trade ideas and its ability to backtest certain market scenarios. I backtest until I find a strategy that I find is working well in this market. And then from there, I pick 2 long, 2 short strategies, feed them to the trade ideas auto trader so I don't have to look at them or think of them at all during the week. Close out the positions on Friday, and then repeat into next week. So I'm constantly having this robot-driven portfolio. Again, if you're interested in that, or learning how to use an algorithmic style swing trading at all, links are in the description below for trade ideas and a discount code that will save you some money, and then that helps out the channel if you use that link, and then my email below for client mentoring as well. So again, it was another good week. It was about $500 per 100 shares traded. Here's our year-to-date equity curve. Based off whether you trade it 1, 2, 3, 4, or 500 shares. That didn't make it in there. Let me actually just, because this is the 10th time recording this, I'm going to just do this live. Scroll down and wait a second, and that will load the chart. Where is it? Apologize for this, but this is the 3rd time recording this video. I got a bunch of new tech, and just getting it set up has taken longer than I would like, but you can see the equity curves here. Again, based off 1, 2, 3, 4, or 500 shares traded across the 40 weeks we are in at this point. So last week we had OMER, which we took on a break of this little triangle consolidation area. That worked out great because we had this little gap, and then it actually held the gap, so that was great. Best Buy, it triggered and just kind of sold off all week, so that was another good one. And then we had a loss on Foot Locker, which broke down but then bounced. Pizza, which was the 4th idea, just never triggered, never got above this point that we were interested in here. So quickly going at what we're looking at for this week, a lot of these rounded bottom and rounded top plays are kind of what's coming through my algos as what is the most profitable in this market. And you can see we had some prior resistance that acted as, or prior support, that acted as resistance here and here. So I think if we get through that, we can continue on with Gilead being in the biopharmaceutical space, which is an interesting one to be in now. And then we have Big C, which is in computer systems design, and it's the same kind of pattern where you can see this nice rounded bottom happening here. It looks like we're breaking above that now. For the tops, we're looking, or for the shorts, we're looking at McDonald's with this big rounded top pattern happening here, and then some short-term, nice looking candlestick patterns. And then in CL, the same kind of thing, a smaller rounded top in through here. A lot of bottoming tails in this area, so I'd want to see this area clear, and that's what I'll tell the robot to look for. and then we could continue down here, maybe to the 200 day or something like that. But last thing I wanted to point out was that the stocks that are kind of forming these more bullish patterns are more speculative in nature, and the ones forming these topping patterns are more staples. And generally, we see that in very strong bull markets. So, not going to make predictions on the market in total, but just wanted to show you guys that if McDonald's and Colgate, Johnson and Johnson, things like this, rolling over, then it makes more sense that that is indicative of a bullish market in which those type of stocks, those staple stocks, generally perform much better in bear markets, right? So if they are underperforming here, then that's just, again, more action on top of the price action for the fact that we are in a bull market and we should be treating the market as such. So that's it for me this week, and I will talk to you guys next.